Hello everybody, what's going on? So few big insights are coming from NIO June. As we move through June 2026, something massive is shifting. The bears have been shouting that the EV market is too crowded and that premium players can't scale. Well, the data rolling in right now is telling an entirely different story. Today we are breaking down why the month of June is shaping up to be a historical turning point for this company, driven by an absolute explosive in demand and record setting delivery momentum. Let's get right into the heart of the matter, the June delivery numbers and order inflows. When analyzing an auto manufacturer's order velocity is your best leading indicator of future revenue and financial health. And right now, NIO's order book isn't just growing, it is completely shattering expectations. I want to bring your attention to a critical piece of data circulating from verified retail tracking and market observer in China. If we will take a look at this file, the underlying momentum is becoming incredibly clear. According to these early aggregations, new orders for the month of June have already comfortably surpassed 47,000 units. Let that number sink in for a second. 47,000 new orders in a single month. This is an exponential leap that put the company on an entirely new trajectory compared to its historical average. When you break down that 47,000 order milestone, you can see exactly where the engine of growth is coming from. The report notes that following the highly anticipated L60 launch, NIO instantly captured approximately 20,000 new orders. Now, what's fascinating here is that the mass market L60 model itself is estimated to account for just under 10,000 of those orders. So, what does that tell us? It means the massive marketing buzz, showroom traffic, and brand halo effect created by L60 launch are actively spilling over and driving heavy consumer interest into the rest of the new premium portfolio. It is a textbook multi-brand ecosystem trajectory working exactly as intended. The breakdown further showcases the sheer strength across individual product lines, giving us specific weekly figures that explains why the aggregate numbers are ballooning. First, look at the brand new executive powerhouse, the ES9, which is racing up a steady 2,000 orders per week. Then you have the ultra premium flagship ES8, pulling in an incredible 3,000 orders per week. On the top of that, NIO's premium compact sub-brand Firefly is consistently contributing another 1,500 orders every single week. When you add up 2,000 for the ES9, 3,000 for the ES8 and 1,500 for the Firefly, you get a highly resilient, diverse and high margin product mix that keeps the cash register ringing consistently week after week. But the story gets even more intense when you look closely at the explosive velocity of their latest product launches. This update highlights an absolutely breathtaking pace of customer acquisition. In a mere 2 week window, NIO has accumulated a staggering 66,000 new orders across its entire network. This is a level of volume that completely alters the manufacturing scale and market share dynamics for the new in the premium EV sector. The primary catalyst behind this historical order surge is undeniably the new flagship executive SUV, the ES9. The ES9 pre-orders crossed over 40,000 units in just 12 days since its official launch. Think about the sheer scale of demand required to secure 40,000 premium commitment in under 2 weeks. Furthermore, the operational execution has been lightning fast. In the absolute tail end of May, during just the last 3 days of the month, NIO successfully delivered over 3,000 units of the ES9 to the customers. The official forecast now indicates that monthly sales for the ES9 alone will easily cross 10,000 units. As the market observer perfectly summarized, this isn't just a conventional product launch. It is a direct, unprecedented sold out spree. The customer response has been definitive, demonstrating the immense pricing power and the flagship dominance that NIO commands. This massive influx of orders in June is the direct continuation of a powerful trend line established just month prior. If we look back at the official operational data from May 2026, NIO sets a massive precedent by delivering a record 37,705 electric vehicles worldwide. That May performance represented a phenomenal 62.3% increase year over year and 28% sequential increase from the April. The momentum is clearly accelerating, and it is happening across all three distinct layers of their multi-brand corporate architecture. For the longest time, Wall Street bears criticized NIO for its heavy capital expenditure and questioned when the financial return on its massive infrastructure would finally materialize. We are looking at that return right now. The business model is scaling beautifully. In the first quarter of 2026, NIO's vehicle margin climbed aggressively to 18.8%, up from just 10.2% in the same period a year earlier. This margin expansion is being heavily driven by a richer mix of luxury, high margin models like the ES8, which generated vehicle margin above 20%, and now the newly launched ES9, which is set to replicate that exact high margin success at even higher volume. Management has provided clear guidance that they expect overall vehicle margins to remain firmly between 17 and 18% for the rest of 2026, signaling sustained financial stability and a clear path towards long-term corporate profitability. Beyond the jaw-dropping delivery numbers and strong margins, we can't talk about NIO without emphasizing their ultimate competitive moat, the proprietary battery swap ecosystem. As of right now, NIO operates an unparalleled network of over 3,917 battery swap stations and more than 28,000 charging points. They are on track to deploy an additional 1,000 fifth generation swap stations throughout the 2026. This infrastructure is a total game changer for customer adoption, completely eliminating range anxiety and charging wait time by swapping a depleted battery for a fully charged one in under 3 minutes. This ecosystem creates an incredibly sticky customer base and acts as a massive barrier to entry for legacy competitors who are lagging behind in proprietary infrastructure. So, what is the ultimate takeaway here for us as investors and market participants? When you look at the totality of the data, from 66,000 new orders in just 2 weeks to the steady weekly order run rate across the ES8 and ES9, it becomes undeniably clear that NIO is no longer just a speculative growth story. They are actively executing a world class manufacturing scale up, expanding their margins, and capturing dominant market share in the largest EV market on the planet. The June delivery numbers are proving that global customer demand for new technology and vehicle ecosystem is at an all-time high. For long-term investors, this operational excellence provides an incredibly bullish, fundamentally sound foundation. To me, the future for NIO looks exceptionally bright from here, and the structural growth story, I would say, is just getting started. So prepare now. With that said, thank you so much for being here. See you next one.